Good afternoon, everybody, and welcome back to one of two sessions which are streaming in parallel. This session is Pathways to Integration, and I'm not only the MC for the conference, but I'm also supporting the moderation of this particular session too. So I'm going to start briefly by introducing our fabulous panelists, and then I'll hand over to somebody who's vastly more experienced than me to moderate the main discussion. So I'd like to introduce, please, Klaus Kirchhoff, founder and CEO of Kirchhoff Consult. You'll have heard Charles mention the joint thought leadership that we published today with Kirchhoff Consult on German investors and non-financial information. We have Susana Peñarrubia, head of ESG integration from DWS, Helene Hergt, head of publications from Munich Airport, and Monica Streck, head of strategic sustainability management at Munich Airport. As earlier this morning, if you have questions, do please raise them, and we'll have an opportunity to ask the panelists during the course of this session. But without further ado, I'd like to hand over to Klaus, please, for this session.
Thank you, Jeremy. You forgot Stefan. He will also be part of our panel. Ladies and gentlemen, corporate reporting is about building trust between people who are responsible for the managing of the company and the company stakeholders. In particular, investors, the owners, play a very important role in this regard. Retrospectively, a company's report gives account on how management used the financial capital that investors have provided. Prospectively, it gives an idea of how the managers intend to create value in the future based on the provided capitals. As we know from integrated reporting, this goes far beyond the financial dimension. A good example of how important a trusting relationship between companies and investors comes from the history of South Africa. The first King report on corporate governance was published in 1994, the year when Nelson Mandela was elected president. The King report responded to the need to rebuild trust with investors as well as other key stakeholders after mass disinvestment of investors helped to bring an end to the apartheid era. As such, it was also an important development that paved the way for integrated reporting. We are happy that Susana Peñarrubia joined us today. She is with DWS Investment, as we heard, and she is well experienced with the investment world. She is going to tell us a few things about how corporate reporting and in particular integrated reporting plays a role for investors. Stefan Hannen, head of sustainable finance of Kirchhoff Consult, will talk to her about that in a short interview. Thank you very much for being with us, Susana, and I hand over to Stefan now.
Thank you very much, Klaus, and thank you for being here, Susana. Klaus already mentioned your experience in investing and the special relevance of reporting for investors and vice versa. Could you describe your role really quickly and elaborate this relationship from your perspective, given the wealth of your experience in the investment sector?
Yes, thank you, Stefan. Thank you for the invitation today. So, as you mentioned, my name is Susana Peñarrubia. I've been working for DWS for the last 20 years. During this period of time, I've been an analyst on the equity side, and also for the last 10 years, I've been managing also portfolios. Since 2017, I have the responsibility as head of ESG integration. So what means at the end of the day, we need to integrate environmental, social, and corporate governance information in everything we do in our investment platform, on the equity, on the fixed income, and also on the multi-asset side. So you asked me already, which is, I would say, the relationship or the role that for investors has the company disclosure, I think is very obvious. So as an investor, obviously at the end, what you like to do is a pricing of the risk and also of the free cash flows that the company is able to generate in the future. So we need to estimate for the next 5 years at least, and then to make an opinion what could happen after that, in order to see if we invest, if we will have enough return for our clients, and obviously at a very specific level of risk. So company disclosure is extremely important for us. In order to make that assessment and the due diligence process, we need to analyze any important or relevant information that may be affecting exactly that pricing of the risk, and also obviously of the free cash flows that the company is able to generate in the future.
Okay, so you already mentioned that the company's reports help you with estimating the value of the company. Can you describe the role that disclosures beyond the financials have in this regard?
Yes, definitely. So for some people, when you say ESG, looks like, you know, a little, it does not sound like financial. But for us, even if the market, you always hear non-financials as a synonym to ESG, for us, actually, the ESG information is like a pre-financial. So we think that looking and analyzing how the company is behaving in terms of having any impact, positive or negative, on the environmental side and on the social side, is helping us exactly to make this estimate. Actually, how we do it is to look and see which are the different impacts at the beginning, identifying which issues are important. So obviously we look very closely to the reporting of the companies, what they think, what are they doing, and how they think this is helping the company for the future. Then we look if there are risks or opportunities. And then extremely important is to see how these risks and opportunities may be affecting the business model of the company going forward, is sustainable or not. As you can imagine, if a company is continuously behaving wrongly versus the environment of the society, at the end, they will be becoming a lot of pressure and probably not having the license to operate. So if you are risking this license to operate, obviously at the end will have also an impact back on the business modeling, also on the operating purpose. And then we are always working in competition. So companies may be improving or deteriorating or losing competitive position versus the peers. So actually analyzing these issues are helping us exactly to come to this point where we can see, is the business model sustainable? How's the competitive position of the company? And then we try to integrate that in our valuation that we are doing, estimating for the next 5 years, and then applying the rest of the quality or risks into the discount factor on the equity side.
Okay, so with all these issues playing a role for the valuation, this is very close to what the Integrated Reporting Council calls a multi-capital model. And you as an investor, and even more than that, the companies and the managers have to understand the relationships between all these different capitals to understand their actual value. So what they do is what we call this integrated thinking. Can you describe the importance that this integrated thinking has for you in the investment process?
Oh, definitely. I mean, the core integrated thinking is actually at the core of everything we are looking at, because you can imagine if we see a company is reporting on something, but this is not integrated in their strategy, then obviously at the end, I think it's very difficult for us to try to put something in evaluation if management and the board is not attending to those issues. So actually in this whole analysis I was mentioning before, the key part is really to see how is the company managing these issues. So are they integrating these issues and the potential financial impact that these issues may have within their strategy, and also very important within the remuneration. So at the end, what we are checking actually is to really look what are the risks of the company and how the company is managing those. And we look at this integrated thinking, seeing if this is part of those targets that the company is trying to reach, and very important also within the CapEx. So where do we let the company go in the future? If something is not working and we see that this is not integrated in this strategy, in this way of thinking that is really driven by CEO, CFO, and then the board, then obviously for us it's extremely difficult to see that the financial impact. At the end, the company has all the internal information to really make all of these assessments versus the stakeholders, and potential correlations internally between these key factors that are really very important for that company in the sector where they are operating, in the countries where they are operating, and seeing which may be the financial impact on the other side. And this is exactly where we would like to finalize the analysis before then we put this actually into our valuation. If a company is saying something, but we don't see any signal that this has been really integrated in their strategy and their targets, also seeing in the remuneration, then it's very difficult to us to believe in them, and then we will not have a high conviction on those issues.
Okay, great, thank you. You mentioned how important it is that the board is behind the integrated thinking, and if we don't have this, it's impossible to come up with a proper integrated report. So with that, I would hand over back to Klaus, who is going to tell us about the preparation of the reports. And thank you very much again, Susana, for
thanks to you,
sharing
Stefan.
these insights.
Thank you. Thank you.
Thank you very much for sharing this, Susana and Stefan. By the way, if you are interested in some more insights on how investors use information beyond the financials for their investment decisions and how integrated reporting can help them to do so, you should check out the research report that IIRC and Kirchhoff Consult have released today. It is available on our Kirchhoff booth on the conference platform, and you are welcome. So, Ketcha, I think now it's time for the 2 pollings. Ketcha, we wanted to have 2 polling questions now. If there is a problem, we can go on with the slides, as you mean. Okay, thanks.
So Klaus, the polls are through, and 92% of see capitals as stocks of values on which an organization's business model depends as inputs, which are increase, decrease, or transform through its business activities and outputs. And then we have an equal 7% on the other definitions of COA. It's changed slightly. The first definition is at 13%, the second one at 7%, and the third one at 80%. It's an overwhelming majority for the third one. So which one is correct?
Okay, thank you. And the correct answer is the third one. Capitals are stocks of value on which an organization's business model depends as inputs and which are increased, decreased, or transformed through its business activities and outputs. Okay, do we already have the second poll?
So the poll is currently live. So Klaus, the responses are bouncing around, but the way the word cloud works is the bigger the word, I think the more people have put it forward. So we're getting some consensus around human capital, intellectual capital, and natural capital. And we also have social capital, social and relationship capital, manufactured capital. I'm just looking around. It looks like this audience is extremely well informed, as we'd hope, and they have indeed picked up 6 capitals and pretty much exactly as they are defined in the framework.
Perfect, thank you, Jeremy. And at least everybody is awakened now, so we can go on with our presentation. For the next 10 minutes, I would like to explain to you why I think that now is the right time to change the traditional way of reporting. Further, I would like to show you how to begin the process in practice. In addition, together, we will look at some good practice examples of business models. And lastly, I will give you an impression of a roadmap that you can use when you start to implement an integrated report. So let's start. Now is the time for integrated reporting. Why? Because integrated reporting addresses broader value creation. Addressing broader value creation reflects if companies are able to contribute to our future, and our future requires our attention now. The question is how to report broader value creation. The next slide on number 10, you know, it means to report information beyond financial performance. And this kind of reporting is based on several standards and recommendations. For example, IIRC, GRI standards, UN Global Compact, Integrated Reporting Framework, the SASB standards, or Sustainable Development Goals, to name a few of them. The next slide, especially in times of crisis or uncertainty, and this is what we are going through at the moment, especially with the pandemic, investors and other stakeholders look for greater transparency. It has never been more important for a company's strategy to be communicated like in these times. The information, how companies plan to proceed with their business in the future and manage risk is particularly meaningful in a very volatile environment. If you want to stay competitive as a company, you need to take a look at how your business affects the environment, the society, and report your impact on that. And in the end, if you want to facilitate change, you must understand the connections. This is called integrated thinking. The next slide, please. Integrated reporting provides for this kind of information. This is why, in my view, crisis drives integrated reporting. You see here a comparison between the traditional reporting and integrated reporting. And for example, Susana said it's important for an investor to know how will the company go on develop in the next 3-5 years. The traditional reporting is very much focused on now and short term, but the integrated reporting has a mid and long-term perspective. It presents all the capitals and shows how the capitals are used, and it is very much focused on strategic on strategy. How will the company go on, and not so much retrospective like the traditional reporting. The next slide, please. Here you can see an overview of the main topics of integrated reporting, and we will together have a closer look at the business model, because this is where integrated reporting begins. Next slide. The main question relating to the business model is, how does the company make money now and in the future? And from there, you move on to analyze the business and include the details. And these are the topics I mentioned there: value creation, the inputs, business activities, outputs and outcome, the performance, risk management, a very important aspect, especially in a difficult time like the time we face now, and the strategic focus I already mentioned. The next slide, please. Here you see the business model sample that the IIRC published. You know this, and it is important that this is only a raw model for your own business model. In practice, it can be highly challenging to be on the point with the information that is needed there. Maybe our Munich airport speakers of today, Helene and Monica, are going to tell us more interesting details about these challenges later. Most important is that no two business models are the same. There is no template, but you must identify the business model that is true for your company. This is all about authenticity. Next slide, please. This is a very creative process and a difficult process, to be honest. It allows for variety and also individuality. As a next step, I would like to show you a few examples of business models from companies of different branches and countries. And we start with SAP. SAP is a German company, very well experienced with integrated reporting. They are one of the pioneers in Germany, together with Munich Airport. The reason why I think this is a good practice is to make you aware that working on the business model is an evolutionary process itself. Integrated reporting is a journey, and you move at your own pace. Concerning the business model, find a starting point. The things left are the capitals, the inputs, and then you see how the business model works, and on the right side, you see the impact of that. The next slide shows you a more sophisticated information, and the idea of such a presentation is not to give you an easy read of information. It's more to demonstrate you how the variety is possible and to inspire you. This is the example of the Istanbul Stock Exchange. And Istanbul Stock Exchange, or stock exchange, is a very complex business. And what they show quite good is the inputs, how they work with them, and the outcomes at the end. And you have to have one thing in mind. If you want to give all the information that you see in this very sophisticated chart in a traditional report, you would have to write 30 to 40 pages. And it would be quite difficult to understand and to read these 30 to 40 pages. So if you spend a little bit of time on a presentation like this, you will at the end easily understand the business. The next slide, please. It shows a business model of Goldfields, a gold mining company operating mines in Australia, Ghana, Peru, and South Africa. Goldfields has published integrated report for many years, thus is a very advanced reporter. In its business model, the company refers to inputs to the left and outputs to the right, and clearly differentiates between positive and negative, which you can see in the bottom. You will not often see, for example, in a traditional report, the willingness to show highlights and lowlights. You often open a traditional report and you see all the highlights on 2 pages, and something is interesting, something is quite boring. But you not often see lowlights of a company. But to show lowlights, to show how you manage them and change it and make it better in the future, this is what communication is about. The next slide, please. It's Sanford. It's a seafood company headquartered in Australia. This is the 6th integrated annual report of this company. And you see at once that the business is about seafood, of course. But a part of that, you can see quite clear the inputs, the business, how it works, what kind of business they offer, and the outputs and the outcomes. The next slide is UK-based United Utilities, UK-based water and water waste company. Quite impressive how much detail they present in reporting their business. For each key resource they defined in the business model that you see in the middle, the blue boxes, and then the next slide, they explain the impact of external drivers on the following pages in detail. And if you see these 2 double pages and read this and study these 2 double pages, you have a clear understanding of the business model of this company. And the last example is Sasol. Sasol is an energy and chemicals company headquartered in South Africa. For me, Sasol for many years now is one of the best examples of integrated reporting. And if you want to get inspired, beside others, you find very interesting presentations in the annual integrated reports of Sasol of the last years. They break down the information first on this double page. They show the business model and their global presence. On the second, next slide, they show the value creation process of the 2 major segments of the business, energy and chemicals, spending another double page for this. And finally, on the next slide, bring in the capitals and explain how they create value with more details and references to further information like operating context, risks and opportunities, etc. Slide 26. Before you begin being inspired and determined after this to enter the integrated reporting process, you have to be authentic. Authentic reporting is key. You have to tell your own value creation story. And this must be convincing, and this must be something that helps investors to understand how you create value, how you lost value, what is your strategy for creating more value in the future, so that they can come to a decision to have the share in their pockets, in their portfolio, or to invest in a company or something like that. And I would always remind people who doubt if the annual report or integrated report is still important for investors. There was a TV discussion with Warren Buffett, an investor everybody knows. And he was asked, how did you come to your last investment opportunity? And he said he one day received an annual report of the company. He studied the report, and at once he could, on one hand, see a great management, big opportunities in these markets. And the next day he called the management and decided to invest in this company. So the report is still a very good tool to convince investors. The second step is you have to define the purpose of the integrated report. Who is the report for, and what would you like to accomplish? The next slide, you then chose the channels of your, this is the definition of the IIRC. You might know it. The primary purpose of an integrated report is to explain to providers of financial capital how an organization creates value over time. It therefore contains relevant both financial and other. The next slide, please. From my point of view, it is very important to realize that the integrated reporting does not mean everything that the company wants to report and to give information to the market is integrated into one report. The integrated report, from my understanding, is still the major instrument to show investors how the company is creating value in the future. If you want to give additional, deeper information, for example, about the sustainability management of your company, sustainability facts and figures, it is good to have a sustainability report also. And for example, if you want to show investors how the governance structure of your company is working, how the effectiveness of the company's organization is organized, then a governance report might be a good idea. And you need all of this published also with a channel of internet reporting, digital reporting. The next slide, after you begin with these thoughts that I just presented, you should look to, yes, please, the next slide, to this 10 points on the checklist that I mentioned for you, which is quite helpful to go through a process of integrated reporting. The very important first step, and Susana mentioned it, and I'm thankful for that, is you need to get the support of the board. If the board is not behind this is the same, for example, if you want to create a ESG strategy or something like that, you need the board, first of all, to be behind this and also to be involved. Otherwise, this is not something which will also be part of the life of the management of the company. So the first, get the support of the board is very, very important. And all the other points, I think I don't have to go through because you can see it on the slides. I would like to go to the next slide. Wish you good luck and want to thank you for your attention. I hope you got a little bit inspiring. It is really a good idea to look deeper into the examples I presented to you and also to look into the reports where these examples come from. If you have questions, feel free to have a discussion after the next presentation that we will have from Helene Hergt and Monica Streck. Munich Re has 10 years experience of integrated reporting, so you will not find better experts than both of them, and I'm very much looking forward to hearing their presentation. So I hand over to Jeremy and Helene and Monica.
Great, thanks very much, Klaus. And I think we're going to pass over to Monica and Helene to talk about their experiences at Munich Airport of integrated reporting.
Yes, thank you very much.
Thank you very much. Hello, everyone. First, I'll take over and share my desktop with you. Okay. I hope you can see. the first slide of our presentation. First of all, I would like, oh, thank you. Thank you. First of all, I would like to thank you for the opportunity to share our experience in integrated reporting with you. My name is Helene from Corporate Communication and Politics, and I have been working at Munich Airport for 28 years now. Today, we are looking back at a history of 10 years of integrated reporting, just as the IIRC. That makes 1,776 pages of integrated reporting altogether. So we are coming a long way, and we are thankful that we have had a strong partner by our side, namely Kirchhoff Consult, that has accompanied us most of the time. In fact, we did 9 years of successful co-working. But it is not only corporate communication that is responsible for the annual report. In-house, we build a team with strategy and finance, and together we are working on our integrated report.
Hi everyone from my side. My name is Streck, and I'm the head of the strategic sustainability team at Munich Airport. I've been working with Munich Airport since about 15 years, and my major subjects are the sustainability side of the integrated report, the development of the sustainability strategy, as well as the sustainability program, and the identification of new issues relevant for the company from a strategic point of view. On our next slide, you will maybe see our agenda, which we want to introduce to you. We will start with a quick overview of Munich Airport for those who are not familiar with us. After that, we will show you our journey of integrated reporting, since we do this for 10 years now. And then we will have some slides also with definitions concerning mainly capitals and business model.
And the next item on our agenda is the combination of the materiality matrix with the types of capital. On the way through our charts, we will dive deep into our online report to show you how we use specific functions like interactive infographics. Then we will talk about the feedback from our target groups before we close with the key learnings.
And if you should have any questions in the meantime, please write them in the chat function. We will try to answer them later.
So let's take off with a short look at Munich Airport. Did you know that Munich ranks under the top 10 airports in Europe regarding passenger numbers? In Germany, only Frankfurt Airport is bigger. We have about 10,000 employees within the group and a total of 38,000 employees and 520 businesses on the whole campus. Besides, we are Europe's first and only 5-star airport among only 6 other 5-star airports worldwide. This rating has just been renewed in November. And to return to the subject, Munich Airport looks back at a history of 10 years of integrated reporting.
Concerning the history of integrated reporting, I will tell you the first part of our story. In the beginning, and that was even before 2010, we published 2 reports, one on the sustainability issues due to the GRI guidelines, and one annual report. But quite from the beginning, we thought about a combination, or as we called it, an integration, not only due to save time and money, but also, and this is the main point, to show that sustainability is key to our performance and to our business model. This is also why we integrated sustainability issues into our strategy, and therefore one report was the logical consequence for communications as well. In 2012, we not only integrated a stakeholder feedback process, but also, and this is much more important, integrated relevant sustainability key performance indicators like carbon emissions or employee satisfaction into the financial part of the report. And we also started to have an assurance company to look at our sustainability data. And we are having a limited assurance on them since 2014. 1 year back in 2013, we also became a member of the IIRC pilot program, and we are still part of the business network.
In 2015, we have adopted the 6 types of capitals of the IIRC. We use these capitals to identify the most important aspects for our business, to present the value we create, and to demonstrate key cause and effect relationships. For the business year 2016, we published our first online report. That was a major step on our reporting journey. We see the print version as the big picture and the online version as the total package. This means all our content can be found online, and print provides more of a summary. This is still a work in progress. In the same year, we introduced our so-called capital tables. They show how selected projects affect the various capitals and, as a consequence, our business model. We will give you more information on this subject later on. Through the following years, we further developed our report. For example, we worked on the expansion of the key indicator comparison and the connectivity of sustainability topics in the online version. A new functionality we offer in our recent online report is the capital filter. I will show you more later.
As Klaus Kirchhoff said before, it's very important and also very helpful talking about definitions and looking at the key elements like the target group of an integrated report and the definition of integrated reporting as such. We found out that we had a slightly different opinion on that than the IIRC has. Let's begin with the target group. The IIRC states its main target group to be the financial sector, though it also benefits all stakeholders who are interested into the organization's ability to create value over time. With Munich Airport, the integrated report is not only for the providers of financial capitals, but addresses all stakeholder groups equally. Secondly, we took a closer look on the aim or the idea of integrated reporting. For the IIRC, consequently, the aim is to provide insights about the stocks of values, the relationship between the different capitals, as well as the output of the value creation process. For Munich Airport, integrated reporting means first of all to shape a holistic view on our business model, including financials as well as non-financial aspects. On the next slide, you can see our very first description of the business model derived from the capital logic of the IIRC. We tried to make things as clear as possible for our readers to offer a definition or better a description of the significance that each and every capital has for us as Munich Airport. Also input, measures and output of those measures were described within our first description. At the next slide, you can see these definitions or the significance of the 6 capitals. The idea was here to make clear which significance has every capital for us as an airport operator. So for instance, the capital infrastructure, I read it out quickly. The wide range of services offered by Munich Airport are reliant on building and transport infrastructure that works and that taps into and makes the most of existing space. Servicing, maintenance, and needs-based expansions are the key parameters required to ensure that the airport campus remains attractive. So for instance, good service is very key for us as a provider of an infrastructure. Additionally, communications created special icons, so the reader can easily recognize the capitals throughout the whole report.
When we showed the 6 types of capitals for the first time, we wanted to make sure that our readers could understand where we are coming from. That is why we chose testimonials to illustrate and to explain what each capital really means to us. We collected statements from a financial expert, a passenger, a businesswoman, and from employees. Let's have a closer look at the capital environment here. As stated on the chart before, the protection of nature and species is a key issue for us. We wanted to point that out with a surprising fact. One of Bavaria's largest curlew population is living on the airport meadows. For those who don't know what a curlew is or looks like, you can see here one on the chart. This bird is at risk of extinction. The airport maintains these meadows using a special system to protect the birds. For example, we do not mow there during the breeding season.
Now back to the business model again. This is our lately published description of the business model. It includes not only the significance, the input, measures and output, but also the try to have a quantitative description of the output, the outcome, as we understood its meaning.
But as you can see on the chart, the business model is quite complex and it fills 2 pages of our landscape format. It is a lot of information to take in. We tried to consider this in the layout of the online solution, where the reader explores the business model more easily and intuitively. By using interactive elements and a clear structure, we reduced the content at first glance. So I'll jump into our online report and then I have to share the screen again. One moment. So here we are in our online report and you see our business model. You can jump directly into the business units, which you find here in the middle. For example, if we click here on aviation, you will see a short description of the business unit aviation. And if you want to read more, you can jump into the group management report where we have a larger description of the business units. But when we go back again to our business model, you see that you can choose by capitals here. You can find the 6 capitals here again. And here you find the significance of each capital. And in this box, you see the input. And under the input, we listed the activities which the airport uses to generate new values. This is the basis for the next fiscal year shown under outcome. You can switch the topics here as well. We have put a great effort into the design of this graph because the business model is a core element of the report.
We also try to find examples or cases that can describe the capital approach more down to concrete projects. So one of the cases is the case of digitalization. And in this case, you can see 6 icons, each for one capital and a positive or negative impact due to them. So let's go through them quickly. On the economic side, we have the positive impact to create, hopefully, new business models and potential sources of revenue. On the other hand, these developments can cost money, and as well the implementation of those new digital cases increases costs. On the side of manufactured capital, a new digital innovation improves, for instance, connectivity, like campus mobility, for instance. Concerning know-how, such projects also expand your digital expertise. Concerning the impacts on employees, you can even increase your employee attractiveness. And in an ecological perspective, streamlined workflows reduce carbon emissions, and also your customer will thank it, for instance, due to higher standards of travel time at the airport. We will now have a look on our materiality matrix. There it is. Here you can see our materiality or sustainability metrics. Every report cycle, we ask our internal as well as our external stakeholders about the relevance of our key issues. In the field in the upper right, you can find the most important issues for sustainable development from our perspective. And here you can also find again the issue of digitalization. Helene will now show you new functions.
When I look at the clock, I think I will show you a few functions just to show you that for each topic, we connected the referring capital here. And if you hover with your mouse, you can see an extra text. So that's, I think that's, I have to hurry up a little bit because I wanted to show you the capital filter as well. You find it here. Normally, perhaps you navigate through the chapters, and in our online report, you can choose. You can travel by chapters or by capitals. And when you are interested in environment, for example, you click here and you find the pages for the capitals. And when you click on the box again, you return to the capital filter. So I have to switch back to our presentation a moment. I have to share again. After the publication of our integrated report 2015, we wanted to know what the readers think of our presentation of the capitals. To find that out, we included a question in our stakeholder survey that we perform yearly to identify the material topics. As you can see here in the graph, the presentation of the 6 capitals was very well accepted.
Munich Airport also takes part in the report critique project of the IIRC, and we think it's quite helpful to have feedback from these experts on our reports. The positive points you can see on the left-hand side, like a good overview of business model and capitals or a clear description of risks and opportunities. But much more important for us are the ideas for improvement, like stronger inclusion of negative impacts or more detailed description of a wider stakeholder engagement, or last but not least, a better integration of the impact of the capitals into the sustainability program. On the next slide, now at the end of our presentation, more or less, we will show you our key learnings. The first one is economic success, social commitment, and the protection of the environment, as well as the conservation of resources, are not separable. From a sustainability perspective, this is not quite new, but our main target is still to bring that holistic view on financial as well as on non-financial issues to all stakeholder groups.
The second finding is about the stakeholders. They are asking for more and more transparency, and they want to be informed about the environmental activities as well as the social commitment of the company.
The often discussed distinction between output and outcome is still one of our key fields for improvement. We showed you our enhanced version of the business model before, combining output and outcome, but we think we should be even more concise on that description within our next reports.
And number 4, as you have already heard before, it's the executive board that has to be on board with the integrated reporting if you want to be successful. That brings me to the end of our presentation. Touchdown completed. Thank you for listening.
Thank you very much, Helene and Monica. We've got 5 minutes for this session, and a few questions have come in. The first really relate to the governance processes around Munich Airport's report. I wonder if you could tell us a little bit more about the governance structures you have in place, and whether it's the report structure or the project plan which actually is driving the activities that you do.
Well, I think I should answer this question. I think it's also both sides of the story, because if you implement a sustainability management, you have also a lot of issues to report about. And you have to integrate them also into your management, because otherwise you cannot report about that. So I think this is key, or it's a kind of, yeah, a medal with both sides that are important. So I don't know who pushes whom, but yeah, this is maybe the try of an answer.
Thanks, Monica. And we've had a question, which is in which stages, as you move from the classic annual report to the integrated report, was the report or this report actually implemented? I think you said at the beginning it's been a 10-year journey, and in my experience, organisations do take several years to embed integrated reporting. But what was the story with Munich Airport in terms of where you were 10 years ago and where you are today, with clearly a sophisticated integrated report?
I don't know if Helene wants to answer, but I can start if I should. I think the report is much more sophisticated in the way how it is presented now. As Helene showed, the different functions that we have, that how can the reader find about more about the capitals, and how is this business model working in a really, yeah, in a new way, I would say. I think this makes the report even yeah, more, it makes more fun to read it and to find out what are the different issues behind these topics.
Great, thank you. And Helena, did you want to add anything to that?
Yes, thank you. First, we talked of more like having a combined report, because you can't just snip with your fingers and you have an integrated report. That takes some time. And I think our second or third report was already integrated, but we are still over the years working on how presenting the content for the readers, so that they can understand our business model easily. Because when you saw the business model from the IIRC, it looks rather complicated. So we try to, yeah, just like with the curlew, with the bird, we try to break it down to our daily routine in business.
Thank you. And I'd like to ask a question of Klaus and Susana, if I may. We've got a couple of minutes left. Klaus, you've talked quite a lot about authenticity and the importance of a report being authentic. When you work with your clients, how do you actually bring out authenticity? And Susana, as a reader of a report, how do you decide if an organisation is being authentic and they're not just have got lovely glossy pictures and glossy words because they've worked with a great consultancy?
You know, I like to speak about tailor-made, you know. If you create a report with a company as a service provider like my company, you always have to have in mind not what you like, what fits to the identity, the strategy, the equity story of a company. And if you have this in mind by creating a report, then you present the company very authentic. And Munich Airport is the best example. There is only one Munich Airport, and I'm sorry about that. I would like to have more good airports in the world like that. And this is what I mean with authentic.
And Susana, on your side, how do you decide if a report is authentic when you read it? You're on mute, Susana.
Yes, sorry. So what I was saying is that as an investor, you obviously look which are the key issues you are expecting a company to report on. So when you look at that report, you would like to see a very sincere and honest view how this company is taking care of these issues. If we see that most material issues are not there, or just these issues are commented, always not on a balanced view, but just on the positive side, then probably this would be the best signals. And obviously, were already mentioned. So if I see something to be said, but it's not integrated in the strategy, then you would agree with me that it's more like a show than really being really part of the company.
Great, thank you. Well, thank you everybody for a fantastic discussion, a great variety of different styles as well, from the Q&A at the beginning, Klaus, to your presentation, to more of a deep dive